Hello and welcome to this week's Australian Share Market Report. I'm Dale Gillam, Chief Analyst at Wealth Within. This week I'll be discussing Warren Buffett's approach to investing, the All Ordinaries Index and the Australian dollar. Now before we jump into the report, I'd just like to mention if you have any thoughts on investing, please comment below and subscribe to our channel to keep up to date with our new content. So let's get into this week's report. The third Buffett insight I want to cover is invest in yourself first. Now the best investment you can make is in your own abilities. Anything you can do to develop your own abilities or business is likely to be more productive. Most people are not going to make most of their money from the stock market. They are going to make it from their careers. So put yourself first. Again, I agree with Buffett, as many desire to be successful at investing or trading, only to not put in the required effort to learn properly and then apply what they've learned. To be successful, you need to put yourself first, and this means to learn how to invest and then just do it. If you do not learn properly, then how can you trust yourself to be a successful investor or trader? It just does not make logical sense. Buffett says that the hardest thing to do is trust your investment decisions. You always think that others are right and you are wrong. Instead, you need to study and believe in yourself. To be successful, you need to overcome the fear and not pay attention to what others are telling you. Accumulate knowledge and make investment decisions on your own to stand separate from the crowd and be a winner. In my experience, the majority do the opposite of what Buffett is saying here, in that they make themselves dependent on others such as brokers, stock reports and recommendations, to name a few. Knowledge overcomes fear. Fear of failure, fear of being wrong can all be overcome through the acquisition of the correct knowledge. Now, if you are relying on others to tell you what to do or what to invest in, then you will be subjecting yourself to emotional decision making, and this is not the most effective way to gain success in the markets. Now, number 4 is buy quality companies. Here, Buffett believes in quality investing, and who could argue with that? He would rather pay a fair price for a great company than a low price for a mediocre company. In my book, Accelerate Your Wealth, I talk about buying cheap, as all too often people buy stocks that they perceive to be cheap in price. But what they're really buying in most cases is a stock at a low price that has even less value. To paraphrase a quote, price is what you pay, value is what you get. There are two principles behind this. The first, if you buy a stock for less than it's truly worth, the stock's price will eventually converge with its intrinsic value. And secondly, if you buy a wonderful business, the value of that business will compound and increase exponentially the longer you hold on to it. So the patient investor will be ultimately rewarded if they hold on to their stocks for a longer time. For Buffett, time is the friend of a wonderful business. Stocks are continually rising and falling in price, and there are many things that might cause this. But it all boils down to our perception of what the real value of the stock is. Here, different people place different values on the same stock, and here is why the market works so well. It is also why I use technical analysis techniques with value investing techniques to determine what I buy and sell, along with when I buy and sell. That brings us to the end of part 2, and next week I will continue with more of Buffett's insights. So what do we expect in the market? Okay, before I get into the stocks, I just wanted to comment on or read out a couple of comments that people have had on the YouTube posts, some various ones. One we had from Barney in the last week, and he said, "Hi Dale, do you think you could have a look at Ramsay Healthcare and Ansell? The healthcare sector has been running well with the heavy weighting of CSL, but do you see an opportunity for these other stocks to move in the short to medium term?" So I'm going to have a look at Ramsay, Ansell and CSL in this Australian share market report, or my stock report here. I've also got another one from Annie, and she's saying, "Hi, QBE is intriguing me at the moment. Where do you think the stock will go to from here long term? Do you think it's currently accumulating at a market bottom or just preparing to continue the downtrending move? Thanks." And lastly, I got one from Marvin. And Marvin says, "Amazing theories, Dale." I think he's talking about Mr. Buffett there, but thank you very much, Marvin. He said, "You're a great person to follow and watch. Thank you very much. Highly recommend signing up to your YouTube channel and diploma course. Keep up the outstanding work. You are as true as the blue sky above us. Cheers to you. So thanks for the nice work, Marvin. So I'm going to get into the Australian or the All Ordinaries Index at this point in time. I'll have a quick look at the Aussie US dollar, and then I'm going to go into, as I said, Ramsey, Ansell, CSL, and then we'll have a quick look at QBE. Okay, now right into the All Ordinaries Index at this point in time. As we were talking about, we thought the market would actually start to fall away over the last week. We were looking for a high, as we talked about, because there were so many bars moving up. So we had 1, 2, 3, 4, 5, 6 bars up. We've got one bar going down. It's moved down, as you can see on your screen, 25% of that whole move from the low of 5832 to the high of 6224. It's still room for it to fall this week as well, so we may see a further fall this week down to that sort of 38.2% at 6087. I'm not going to stress on this market unless it breaks through that 50% level, which is 6038. Up until that point, I'm still thinking this is going to be just a retracement. Markets go up in stairs, comes down in elevators, so we do need to come down a little bit to then get the momentum to go back up again. So right now is really, really normal. It's nothing to be worried about. At this point in time, as I said, if it goes down, it may, right now, the last week as of the end of the 25th of May, or Friday the 25th of May, our market closed at 6140. So as I said, it's probably about 100 points it can come down before I'm even going to get thinking it's more bearish, but right now I still think it is bullish. Just a quick look at the Aussie US dollar. We can see here, this is a weekly chart on the Aussie US dollar, and you can see, I'll just scrunch it up. You've seen this chart before. You see how it's been moving down. It's a little bit weak at the moment, currently closing at 75 cents US, sorry, if I'm on the right bar there, 75.4 US cents. It's sitting there. It's showing a little bit of weakness. I do need to see this move up a little bit more for me to get excited at the moment. I'll just briefly show you the daily chart and we'll whack on to that. You can see how it has moving up a little bit in the since the 9th of May. So we had some nice little moves right up through to here. So we're at the 25th of May here with the bearish bar on Friday. So we saw, if I just expand that up a little bit, you can see how Friday we've had a bit of a bearish bar. For this to be moving up closer towards that 80-cent mark, I would need to see this move up this week rather than down further, stay above the low of this bar here at 75 cents. So I'd expect this to be a little bit of a counter trend and then move up. It does need to move above that 76 cents for me to start calling the Aussie dollar bullish against the US dollar. Right now, I think this could be just a bit of a retracement for a little bit before come back down again. But I am prepared to be wrong on that. Now let's get into the stocks. Let's go into QBE. QBE is one of those interesting stocks that just doesn't perform up to its potential, and that's really where the issue is. If I can get this to scroll up, you can see how this stock was an absolute rip snorter for many, 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 many years. It was a brilliant stock right up to that high in April 2001. Then you see a little bit of a dip, and that high in July 2001 before this big fall. This big fall was the September 11th attacks in the US on the World Trade Center. This thing fell out of bed straight away, and I remember I was flying to Perth when that happened, and I had people in Perth saying, you know, when QBE that week fell out of bed, they said, you know, how could your rules protect you on that? And I can tell you straight away that the rules in my books would have got you out of this stock right up near that top, and I proved it to them on the spot without even, you know, I knew they would work, and they do work from there. So you would have got out around $10 or $11. Beautiful run then right up to its all-time high here of 34.53, but since then this thing has been a real dog stock for the Australian market. Interestingly, it really does find support around this sort of level. You can look at that here. It's a pretty strong level, that early $9, you know, around that 9. What's the lowest one there? 9.28. So to me, this stock, if it stays above that, then it's likely to, you know, move higher from here. But really, we do need to see it break out. If it does break below that line, then it's heading further south, and it'll probably end up down at this low there where it was in 2001, which is 315. So it really does need to stay above this. Right now, I can't see any good news for it, so I'm sorry about that. I can't see any good news for it at this point in time. For it to start proving it is bullish for me, it really would need to get through that sort of $13 mark through here, this last high here around that $13 mark for me to prove it's bullish. Let's get into Ramsay here. It's been a brilliant stock on our market, especially it is in that healthcare sector. It's been a little bit bearish in the last year or so. It's, as you can see there, its all-time high is $84. It has come right down at the moment. I wouldn't be in this stock. I would have been out of this ages ago, but it has been a very, very good stock, as I said. But as I said, since September 2016, so just over probably about 18 months, it has been bearish. Right now, if it does fall below these sorts of levels through here, then it's going to go a lot further. At this point in time, it does look like it will do that. I don't think it's going to hold up for too much longer. So there's plenty of reasons not to be in it. There's rules that I teach just in our basic beginners trading mentor course that would have had you out of this stock. There's rules in my books that would have had you out of this stock. So anybody with just trading on some rules, so some basic rules, would have been out of this stock a long time ago and not holding it. So it's not a stock that I'd be holding right now. And when it does, if it does break through that sort of level at $58, $59, it's going to go south. Let's look at the next one. Ansell, again in the medical sector, as we can see. Bit different story here. It's all-time high back in, where is it? April 2015 at $30.40. Now you can see here how it's moved quite deeply down into this low in February 2016, but since then it's been more bullish. It's rising up quite nicely actually through to here. Closing at this point of time of the month, closed last week at $26.03. Right now I'd be holding this stock. If you're in it, I'd still be holding it. It is still a stock that's worth keeping in your portfolio. One thing that you need to interesting here is right across there, you can see how this bar closed from March 2015. It closed there at $27.55. The bar, which is all-time high, closed at $26.09 after opening up at $27. So it's struggling at that level, and it turned it away again, $27. So I wouldn't be surprised if we get a bit of a retracement here for maybe 1 or 2 months for them to start moving up again. But there's no reason why it can't break that point at this point in time. But as I said, if I did have that share, I would be hanging on to it. Let's have a quick look at the weekly chart. Yeah, it still looks all right to me. As I said, it could be just 1 or 2 weeks down or even a month down before it starts to move up. But just keep an eye on it just in case the fall is further. Have a look at this CSL. Isn't it a brilliant stock to own? And if you do own that sort of stock, this stock at this point in time, there is no reason to exit the stock. And a lot of people do that. They panic about their profits if they've been making profits. They'll exit a stock because they go, wow, it's gone. I want to put some money in the bank. And whilst that's not necessarily too bad for you to take some profit off the table, it's whilst the market is running or whilst the stock is running, it's best to stay with it until you get some reasons to get out of it. And what I mean by reasons is actually rules. Too many people just sell on a whim rather than on solid rules, and that means that they don't capture all the profit they get. And what happens is they let their losses run, and so they don't sell stocks that are losing them money, and that's the opposite of what you should be doing. You should be hanging on to stocks that are rising and getting out of stocks that are falling. Right now, I can't see any reason why CSL is not something you'd stay with within your portfolio. Other question is, should I buy it now? No. It's not the stock you should be buying right now. You really, it's gone so far. You need to get it to retrace a bit to see where it is before there's profit, because you don't know how far it's going to run. So that's it for this week's stocks for the Australian market. So good luck and good trading. What are your thoughts? If you've got any questions, please comment below. Go and listen to our Talking Wealth podcast. They're available on Soundcloud and on our website. Now they're jam-packed with valuable information which will help you elevate your trading. Now if you're serious about learning to trade the share market and you'd like more information about our courses, please click the link in the video description below. Thank you very much for watching this video. If you've liked the video, remember to subscribe to keep up to date. I'm Dale Gillam, the Chief Analyst here at Wealth Within. Goodbye, good luck and good trading.